Hi, today I'm gonna tell you more about this company that I was assigned to, and of course I'll do an analysis on China Fishery Group Limited. On to macroeconomics. Based on information found, global economy is still struggling to gain momentum as many high-income countries continues to grapple with legacies of the global financial crisis, and emerging economies are less dynamic than in the past. Activity in US and UK has gathered momentum as labour market heals and monetary policy remains extremely accommodative, but the recovery has been sputtering in Euro area and Japan. China, in the meanwhile, is undergoing a carefully managed slowdown. Growth in the global world in 2014 was slower than initially expected, continuing a pattern of disappointing outturns over the past several years. There are several major forces that are driving the global outlook. The first will be soft commodity prices. Next will be persistently low interest rate but increasingly divergent monetary policies, and of course the weak world trade. In particular, the sharp decline in oil prices since mid-2014 will support global activity and offset some of the headwinds to growth in oil importing countries, but it will dampen growth prospects for oil exporting countries with significant regional repercussion. But overall, it is expected to rise moderately to 3% in 2015 and average about 3.3% through 2017. Moving on, we are going to talk about domestic economy, Singapore, and this is a flag. GDP in Singapore has expanded 1.5% in the fourth quarter with an average of 6.8%. On to employment rate. Unemployment rate was 2% with an average of 2.49%. Doing the math, you have found it to be 98%, which is pretty good for the economy. Inflation rate in Singapore was recorded at negative 0.3% in November 2014 with an average of 2.8%. Interest rate in Singapore was last recorded at 0.19%, and the government has recorded a budget surplus that equals to 1.1% of the country's GDP, which is pretty swag. Singapore fiscal policy is directed primarily at promoting long-term economic growth, and private sector is the engine of growth, and the government role is to provide a stable and conducive environment for the private sector to thrive in. Tax and expenditure policy should be justified on microeconomic grounds and focus on supply-side issues. And of course, the counter-cyclical role of the fiscal policy is limited due to high import leakage. Moving on to the monetary policy of Singapore. Over the last 3 months, Sing dollar has generally fluctuated around the middle of the policy band. Depreciation of Sing dollar against broad-based strength of US was partially offset by appreciation of Sing dollar against Malaysian ringgit, euro, and Japanese yen. Thus, movement has been relatively muted compared to the bilateral movement against major currencies. The 3-month Sing dollar SIBOR increased slightly from 0.41% at September to 0.46% at end December 2014. Rose further to 0.65% in mid-January 2015 and since stayed around that level. MAS will therefore continue with the policy of a modest and gradual appreciation of the Sing dollar policy band, but the slope of the policy band will be reduced with no change to its width and level at which it is centered, and they will of course continue to be vigilant over developments in the external environment and their impact on the domestic economy, and MAS stand ready to curb any sharp movements. For the industry analysis, it will be on the fish industry for my company. The fishing industry is industrial activity concerned with taking, capturing, processing, preserving, storing, transporting, marketing, or selling fish or fish products. For industry structure and performance, since the late 1970s, AVA has been instrumental in the industry. Singapore has one of the highest rate of fish consumption per capita in Asia, second only to Japan, with fish and meat accounting for approximately 40% of a typical Singapore food bill. In general, Singapore's seafood consumption is approximately around 100,000 tons per year. Consumption of frozen fish has risen significantly in Singapore, increasing from 70,115 tons in 2002 to 34,297 tons in 2010 as compared to others. There are some well-received seafood import in Singapore market, including fresh chilled Malaysian shrimps, Norwegian salmon, frozen Chinese cuttlefish, Sri Lanka crabs, and of course many others more. Singaporeans generally buy fresh or chilled or frozen fish from supermarkets or wet market as far as the retail channel is concerned. The latter is a preferred choice for older Singaporeans, while the former is a more popular one among young and middle Singaporeans. who actually sees it as offering a quicker and cleaner shopping experience. So Singapore is home to consumers who are generally well exposed and informed, so they're mostly price and or quality conscious. So for equity valuation, P/E ratio is found to be 6.9 and is estimated to be 5.92 in September 2015. So for our financial analysis, we have found the formula for ROA, and it has been found to be 2.2% for China Fishery. ROC is 5.5%, ROE is 5.2%. There's a financial leverage of 2.3 for the company itself, and EVA of negative 55.26. So book value per share is 59 cents, earning per share is 3 cents, and is estimated to be 35 cents in September 2015, which is pretty good. Current ratio is 2.4 for China Fishery with a quick ratio of 0.8, and both has been increasing over the years. And lastly, profit margin is 9.8 times, which has been dropping since 2011. For technical analysis, the chart currently there's a double top pattern emerging where the support will most likely to be at 0.27 if completed, and if it breaks the support line. Trend will continue downwards where the next support will be at 0.2446. Candlestick has closed below the short-term line trend. Taking into consideration that prices are still below both 50 and 100 moving average, trend could possibly continue downwards if support is broken. Next is using Bollinger Band. We can see that it's still trading in the upper range of the band, which means that the price could continue in that range or drop at is nearing the top of the band and might fall back into the range or the lower band, which might be the support line of the candlestick. In addition, volume isn't very really high, so it's better to wait for another indication of the movement price. So I have done a little calculation using Excel for skewness and kurtosis, and I have found that skewness is 0.476, which means small loss frequent and few extreme gains. Kurtosis is found to be a negative 1.02, which means that there is a less higher risk of extreme outcome as it is negative. But in conclusion, in my own opinion, I think that there are better companies to invest in compared to China Fishery. Profit margin has been dropping, EPS is low, and in addition, using technical analysis, there is a high chance that, which is shown in technical analysis, that the price of the stock will drop. And ROE has been dropping since 2011 based on information obtained from Bloomberg. EVA is also negative, which indicates an economy loss, where the person could actually earn more in another investment. The to equity ratio has been increasing, and even though it does show that the company is actually using money to do things, profit margin has been dropping, which proves to be a problem when repaying debt. Financial leverage is actually higher than 2:1, which indicates financial weakness. And therefore, I would suggest that it will be better if the investor will invest in another company where they will be benefiting more. And this concludes my presentation. Thank you, and I hope you enjoy it.